Traders, this could be the move you've been waiting for. Yes, EURGBP just formed a textbook inverse head and shoulders on the 4 hours time frame chart, okay? And this is one of the most reliable reversal patterns in the forex market. If this plays out well, as we're going to see, we could see a very strong bullish move of over 300 pips. All right, so in this video I'll show you the exact levels I'm watching, the possible targets and the stop loss, and how you can trade this smartly even if you're a newbie in forex trading. If you haven't subscribed to the channel, hit that subscribe button and turn on your notification bell so you don't miss out when I release my next videos. What we are looking at here is a classic inverse head and shoulder pattern with the left shoulder right here and the head is at this point and the right shoulder is at this point. Now in this case we have two areas we can consider as our neck region depending on how you want to look at it. Both of them are right. This level of 0.84489 is the neck region if you're considering the closing price is right here, okay, and neglecting this upper wick, right? So in that case this is our neck region. Okay, but if you are considering this upper wick and these wicks right here, in that case we are having our neck region right at this point, okay, connecting these lower highs, right? So that is also a correct neck region. So in that case we are having a downward tilted inverse head and shoulder pattern. But the most important thing is that we have seen a breakout above the neck regions, okay, whether we are using this horizontal neck region or we're using this downward tilted neck region. We're already seeing a breakout above the neck region, so we have a confirmed inverse head and shoulder pattern. So here is my checklist before taking a position. Number one is, are we having a very clear symmetrical inverse head and shoulder? The answer is yes. We've seen a very clear symmetrical inverse head and shoulder pattern right here. That is number one, is established. Number two checklist is the neck region broken? Have we seen a break above the neck region? The answer is yes, because we've seen a breakout above this neck region right now. So that has been confirmed. The next question before taking any trade is, have we seen a retest of the neck region to ensure that that neck region holds and to confirm that this is not a fake out? The answer is partially no. So I have to expand it so that we can see exactly what I am saying. After this massive breakout candle, we saw a retest of this horizontal neck region, okay, this very one. So we've seen a retest and a bounce. However, if we are considering this very downwards tilted neck region, then we have not seen a retracement, okay, and that will also make sense when you look at the imbalance that this very candlestick created, this breakout candlestick. So we haven't seen a feel of that imbalance. There is a very high probability that we're going to see the price come back to retest this very neck region because of the imbalance that is right here, and from there we can see a bounce to the upside, okay. So I'll be looking for trade opportunities around this area. Any pullback into these very areas will be best place for me to take my buy position. So is either you put your stop loss below the right shoulder or below this point. Now the reason why I may not choose to put my stop loss below here is that sometimes the market seek liquidity, and you see here that you're having lots of equal lows. The market sometimes may just move very swiftly to try to take off some of the lows here and then bounce off. That could be one thing you may see, but most often it may not get there. So the best option is put your stop loss just below here. So look for buy opportunities around here with your stop loss below the right shoulder. Then our target is to this very point, which is the height of this very inverse head and shoulder pattern. Let's say we're using a pending order. We put our buy limit order right here as the place we are going to take our buy position. Then our stop loss will be right below this very point, okay. That will be about $46. then our take profits right here. So we are risking $46.9 and we are going for 153.8 USD. So in that case, our risk reward ratio is over 1:3. So that would be a very good trade to take. So that is exactly how I'll be placing the trade. I'll be waiting for the market to come to me, not me rushing to the market. All right.